Stocks are not the only winners from the economic recovery. High-yield municipal bond funds saw a record $1.3 billion in inflows over the past week. That's thanks in part to optimism around President Biden's $2 trillion infrastructure proposal. Bank of America recently said we could be headed for a, quote, golden decade for muni bonds under President Biden, especially if Congress passes this infrastructure plan. For more now on what infrastructure spending could mean for the muni bond market, let's bring in Nisha Patel, Director of Fixed Income and Portfolio Manager at Parametric. Thank you very much, Nisha, for joining us here. The muni bond market is key for so many of our viewers and listeners out there because they are looking for that tax-free income. Take us through what's driving the muni bond activity today. Is it the infrastructure optimism?
It is. And year to date, we've seen tremendous flows into municipal bond funds, into municipal bond products. Muni bonds have outperformed the respectable taxable counterparts pretty considerably, particularly in the high yield space. And I think a lot of this demand, it's driven because of the prospect of higher taxes and certainly the certainty that taxes are not going to be going down from here. Now, if you take a look at the infrastructure bill, one of the key components here is on how it's going to be paid for, which with certainty, corporate tax rates being raised is one kind of aspect of that. Now, President Biden has mentioned individual tax rates going up, but it's not directly tied to this infrastructure bill. But even for corporations, which hold about 20% of municipal bonds, which is not very well known, if their tax rates do go up considerably, I think you could also see them coming in to buy more municipal bonds.
Is it strictly because of the prospect for higher taxes in this infrastructure plan that's driving the muni flows, or could it be other factors as well? Say maybe some of the projects and plans that could go into it. What exactly does that whole trade kind of look like in your mind?
Yeah, so if you take a look at the details of the bill, obviously, given that the main proposal or the main bill really is for infrastructure, a lot of money in that breakdown is for transportation, is for clean drinking water initiatives, is for affordable housing. A lot of this overlaps with municipalities and the type of debt that they issue. And so, one of the key components that we're looking out for is how exactly does this affect supply? There's no doubt about it that municipalities will have to play some role in this. However, do they roll out some sort of a program like they did back in 2010, where there's a subsidy that municipal issuers receive to issue a loan under this new program? Or, are they receiving some sort of another incentive? But I think from an investor standpoint, there's going to be, certainly more opportunity, I think, possibly from an issuance perspective. And as a resurgence of ESG investing is coming about in many aspects of the market, we are starting to see that in municipal bonds as well. So that's something that I think investors are looking out for. More ESG friendly, again, clean drinking water initiatives, affordable housing type of projects that they could take advantage of in the municipal bond market, which typically hasn't been done before.
Shepard Smith here. Thanks for watching CNBC on YouTube.